Hello friends, I hope you are safe and well. Last lectures we have discussed about the valuation of stock by using the FIFO method and weighted average method. Now friends, we will discuss about the various things which is related to the our syllabus. In our semester 1 there are total 4 modules are there. Under 4 modules, accounting standards issued by ICAI, it is one of the important module. Then second module was final accounts, then departmental accounts and accounting for hire purchase. In that we have studied the 3 modules: accounting accounting standards, final accounts and departmental accounts we studied, and we just remain the hire purchase. Now before starting the hire purchase we will discuss exam point of view. Now friends, FYBCom semester 1 exam will be there, will be conducted by college in the month of December. In the month of December they will conduct the FYBCom exam semester 1, and such exam paper pattern is multiple choice questions. It means for one sentence they will provide and 4 options is there. You have to select appropriate answers, appropriate option, and we will conduct online exam. So these things you have to keep in mind. We have a online test, and for that purpose today we are going to learn certain online test, how we will conduct that we have studied. We know about how to solve the online paper because we conducted one test, objective test. Now we will discuss some important multiple choice questions which are related to our models. Let us discuss some important part. Here you have with us this particular questions and some answers also there. Now this is our subject is accountancy and financial management paper 1. Question number 1. Question, 4 options A, B, C, D, and from this A, B, C, D you have to select any one option. Now question number 1. Dash method assumes that the stock received first is issued first. Option A, FIFO. Option B, option A, LIFO. Option B, FIFO. Option C, weighted average. Option D, none of the above. Here first issue, first received, first issue, so it is called as a first in first out method. It is called as a FIFO method. Number 2, dash method assumes that the stock received last is issued first. Option A, all of the above. Option B, FIFO. Option C, option LIFO. Option C, FIFO. Option D, weighted average. Here stock received last and issue first, so it is a LIFO method. Last in first out. Last in first out. Question number 3. In dash method, stock is valued at oldest rate. FIFO method, LIFO method, weighted average, none of the above. So here we have to valued at oldest stock under LIFO method, last in first out. In Dash method, stock is valued at current rate. Answer, LIFO, none of the above, FIFO, weighted average. The answer is FIFO method. Current rate we will consider. Dash method, stock is overvalued when the prices are rising. Weighted average, all of the above, FIFO method, LIFO method, FIFO method. Answer is FIFO method. Whenever the stock is overvalued, when the prices are rising, under FIFO method. Dash method is suitable for perishable goods. FIFO method, none of the above, weighted average method, FIFO method. The answer is first in, first out. Perishable goods, those who are easily become a scrap, for example fish is a perishable goods, bakery products perishable goods, vegetables perishable goods, and for that purpose they apply FIFO method. Dash method is applied when the lots of goods are not identifiable. FIFO, weighted average, LIFO, none of the above. Answer is weighted average method. In dash method, balance sheet shown current cost of stock. FIFO, LIFO, FIFO, none of the above, weighted average. Here answer is FIFO method. Under dash inventory system, stock is valued by physical stock taking, perpetual, none of the above, both perpetual and periodical, or periodical. Here answer is periodical. Under dash inventory system, stock is valued on the basis of the storage ledger, both B and D. B and D means B is periodical, D is perpetual. Then second option periodical, third option none of the above, fourth option perpetual. Answer is perpetual. Under dash method, fluctuation in pricings are overcome. FIFO, LIFO, all of the above, weighted average. Answer is weighted average. Accounting Standard 2 recognizes dash and dash method. FIFO and weighted average, none of the above, FIFO, LIFO, FIFO and weighted average. Answer is FIFO and weighted average. Under dash method is assumed that stock received first, issued first. So here FIFO, all of the above, weighted average, FIFO method. So which one is a LIFO or FIFO? FIFO. These are all we have studied. It is the oldest rate of stock we have to consider. Under which method we have to consider the oldest rate of stock? LIFO method. Closing stock is valued at latest cost. It is also FIFO method. In inventory of valuation, dash concept is follow. Answer, consistency, realization, conservatism, none of them. Answer is realization. Dash method is recognized by Accounting Standard 2. LIFO, FIFO, weighted average, none of the above. Answer is FIFO method. Dash method is not recognized by Accounting Standard 2. FIFO, weighted average, LIFO, all of the above. Answer is LIFO. Under dash method, balance sheet does not show stock at current price. Physical, periodical, perpetual, none of the above. The answer is perpetual. Under dash stock taking Stock is valued periodic, perpetual, physical, all of the above. Answer is physical. Under the dash method, stock is valued after every transaction. LIFO, weighted average, FIFO, none of the above. Answer is FIFO. Dash is followed when there are fluctuation in prices. FIFO, LIFO, none of the above. Weighted average method. So answer is weighted average method. Whenever the fluctuation is there, that time we have to follow weighted average method. Under dash method, lots of stock should be identified. Lots of stock should be identified. LIFO, weighted average, all of the above, FIFO. Answer is FIFO method. Then friends, some true and false questions are there that we will study. Inventory valuation affects the income statement. True or false? The answer is true. Periodic inventory system making available continuous balance of stock. Answer is false. Perpetual inventory system makes available stock at the end of the year only. Answer is false. FIFO method is a logical. Answer is true. Weighted average method is suitable when the lots of inventory are not identical. Answer is true. Historical cost is the cost to be incurred in future. Answer is false. Historical cost means the original cost. It is the past cost. Replacement cost is the cost of the assets on the date of replacement. Answer is true. Bin card. Bin card shows the stock position in the bin card. Answer is true. Accounting Standard 2 governs inventory valuation. Yes, it is true. Inventory includes machinery purchase ahead for giving a rental basis. It is false. Damaged inventory is valued at cost or market value, whichever is lower. Answer is false. Finished goods are valued at cost or market value, whichever is higher. Answer is false. So I hope you understood the true or false how it will come. Market value is net realizable value. Net realizable value less profit. Discounted present value, none of the above. So answer is market value means net realizable value. The method reflects the latest purchase cost in the closing stock is FIFO, LIFO, weighted average, none of the above. Answer is FIFO. The system which keeps records continuously is perpetual, periodic, physical, none of the above. Answer is perpetual. Perpetual means permanent. Stock is valued at cost or at the market value, whichever is lower, as per realization concept, cost concept, matching concept, entity concept. It is as per realization concept. The system in which each and every item in the warehouse is physically verified is perpetual system method, perpetual system, inventory system, physical inventory system, retail inventory system, or none of the above. Answer is physical inventory system. The standard which governs the inventory valuation is AS2. It is Accounting Standard 2. carriage on purchases is added to cost of inventory, deducted from the cost of inventory, multiplied by the cost of inventory, none of the above. It is added to cost of inventory. The system in which fluctuations means up and down in prices, are averaged out. Weighted average method, FIFO method, LIFO method, none of the above. Answer is weighted average method. The concept applicable for stock valuation is consistency, realization, conservatism, cost. Answer is realization. The concept applicable for inventory valuation is consistency, realization, conservatism, and matching. So here the concept is conservatism. See the prints, what kinds of question, how it will come, that you should know about. Then inventory of trading concern includes raw material, finished goods only, WIP means work in progress, none of the above. Answer is finished goods only. Inventory of trading concern, only finished goods we can show. Under periodical inventory system, inventory is valued periodically, yearly, continuously, none of the above. Answer is periodically. Under perpetual inventory system, inventory is valued continuously, yearly, half yearly, none of the above. Answer is continuously. It is a permanent. When the closing stock is undervalued, profit is understated, profit is overstated, no effect of the profit, none of the above. It is, if it is undervalued, profit is understated. Now, when the closing stock is overvalued, it is exactly opposite. Profit is overstated, profit is understated, no effect of the profit, none of the above. The answer is profit is overstated. Stock undervalued, profit understated. So, closing stock overvalued, profit overstated. Inventory of manufacturer includes stock of raw materials, stock of WIP, stock of finished goods, all of the above. Answer is all of the above. Next, under this method, it is assumed that the goods sold are first units were purchased. FIFO, LIFO, weighted average, none of the above. Answer is FIFO. Under this method, it is assumed that the goods sold are the units that were purchased last. FIFO, LIFO, FIFO, weighted average, none of the above. Answer is LIFO. Under this method, it is assumed that the units are issued at random. Average, FIFO, LIFO, none of the above. Answer is average. Current profit is overstated when closing stock is overvalued, closing stock is undervalued, when the opening stock is undervalued, both A and B. Answer is both A and B. Current year's profit is understated. This is exactly opposite. Opening stock is undervalued, opening stock is overvalued, closing stock is undervalued, both B and C. So answer is both B and C. B means opening stock overvalued and C means closing stock undervalued. So I hope you understood how we will solve these sums, and you should know about, only we have studied today inventory valuation accounting standard 2. In that we discussed in our last lectures about the FIFO method and weighted average method, and we studied, you have the PDF also. So we discussed today objective questions. I hope you understood these objectives. Next video we will discuss the next chapters, that is a manufacturing final account, and in that particular chapter what kinds of objectives are there, that we are going to discuss. Friends, you have to study, see the videos regularly and study the objectives, because questions, online exams whenever the university or college will conduct, That time they will ask the objective questions, which are whatever we will study right now. I hope you understood. Keep watching these lectures. Thank you.